Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. If you have questions or topics you want to discuss, please chat those over and we'll go through them sequentially. The topic we brought to discuss today is my solo 401k a scam? And to answer that question, we want to go through some of the top benefits of a solo 401k, where we'll find out that it's definitely not a scam. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. All right, we'll jump in with some of the initial questions. Again, if you have questions or topics that you want to discuss, please chat over questions or topics to discuss. It can be on this topic or an unrelated topic. Does my solo 401k plans allow for reverse rollovers into it from the pre-tax IRA? If so, it opens up the door to backdoor Roth IRAs. So someone over 50 could have $85,500 of combined Roth contributions. I'm understanding that you're referring to transferring money. Just so let me clarify. I'm understanding you're referring to transferring funds from a pre-tax IRA to the pre-tax solo 401k to facilitate a backdoor Roth IRA contribution. Because in order to make a backdoor Roth IRA contribution, you've got to consider the pro rata rules where you look across all the different IRA account balances. And so if someone has, say, pre-tax money that's in one IRA and then they make a non-deductible IRA contribution because they make too much money to be able to make a Roth IRA contribution, and then they go to transfer those funds over to a Roth IRA, they're going to transfer a pro rata portion. So part of the transfer would be considered to be pre-tax money, and therefore they'd have to pay taxes on the conversion. In part will be considered to be after-tax non-deductible money. But if that individual were if they were eligible to set up a solo 401k, they could transfer all those pre-tax funds from the IRA over to the pre-tax solo 401k, so that when they then later made a non-deductible IRA contribution and then went to transfer those non-deductible IRA funds over to a Roth IRA, in other words, a backdoor Roth IRA, they wouldn't have any other pre-tax funds. So the pro rata rules would have no practical effect. Because when you apply those pro rata rules to a backdoor Roth IRA contribution, you can ignore funds that are in a solo 401k. Next question, do you assist forming a series LLC owned by the solo 401k trust? So we definitely have customers that will invest their solo 401k into an LLC. And we've got a lot of good information on our website about the process to do that. For example, it's got to be a new LLC. The sole member of the LLC is going to be the solo 401k. The solo 401k owner, the individual, acts as the manager. So they have direct checkbook control over that money. As in a customer accommodation, we do have customers that will want us to help them set up the LLC, which we do that for a one-time fee plus whatever the state charges to form those articles or file those articles. But when we do that, we don't do it as a series LLC. We just do it as a one-time LLC. But the customer is free to, say, work with their tax or legal advisors to set up a series LLC in their state. So there's nothing about the plan that would prevent them from doing that. Thanks for these good questions. We do appreciate it. If a person wants to max out their 401k, they have to crank up their salary to $170,000 in order to do the 25% profit sharing match. Well, first of all, match doesn't apply to a solo 401k. Instead, it's a profit sharing contribution. So there's no prerequisite. The individual makes an employee contribution. So it's not a match. It's just a profit sharing contribution. But yes, in the case of a self-employed business that's taxed as an S Corp or a C Corp, the ability to contribute is going to be based on the W-2 wages that they receive from their S Corp or their C Corp. And the profit sharing contribution is going to be 25% of those W-2 wages. Doesn't the FICA tax on that outweigh the tax savings on the federal side? FICA is $4 FICA on $4 is 60 cents. The $1 that allows us to put into the 401k plan only saves 40 cents, assuming 37% federal tax bracket and 3% state. Well, you definitely want to, that's a great question. I mean, you'd want to consider that in consultation with your tax advisor, because you're exactly right. You're exactly right in the sense that the individual would need additional W-2 dollars to justify that contribution. So if they're trying to maximize the employer contribution, they'll need to raise their wages. But if they're only trying to make after-tax contributions or employee contributions, it's not a percentage. You can do 100% dollar for dollar up to the lesser of the W-2 wages or the applicable limit. So in other words, the employee and the after-tax is not a percentage, unlike the employer. But yeah, you would definitely want to consider it from all angles in terms of the pros and cons. Essentially, the individual would be shifting from income that they earn as the owner of the corporation to income that they earn as an employee, which may be taxed at a higher rate. So that would lessen at least the pre-tax benefit of making that contribution. So it's good to take that type of analysis. I don't disagree. I currently have a retirement trust completed by my solo 401k. My question is regarding crypto holdings and how to hold the keys in a cold wallet. Does our plan allow to hold the keys? Yes, it needs to be held in a separate dedicated wallet. The wallet would need to be stored in a safety deposit box associated with a bank account in the name of the solo 401k. And we've got a procedure page on our website that talks about storage considerations. Okay, these are great questions. Again, thank you for bringing them. If there's more questions, don't hesitate to chat that over. Let's spend a little time going through the slides, and then we can come back to the questions. So you may see information online, for example, that individuals or commentators will describe a 401k as a quote unquote scam. So we wanted to chime in on that conversation. The reality is that a 401k is a tax advantage retirement savings tool. And those comments might be more relevant to a full-time employer plan. And we'll focus on the solo 401k, which has a lot more features, customization, etc., that mitigate any of those considerations that might lead one to claim that a 401k is a scam. So we're going to focus on the solo 401k, which is specifically for self-employed individuals. So when those commentators are describing the 401k as a scam, they'll oftentimes focus on fees and poor investment options. So first of all, with the solo 401k, if it's a truly self-directed solo 401k like the one offered by us, by my solo 401k Financial, then we charge a totally flat fee. So it doesn't go up if the value of the plan goes up. We charge $650 as the initial fee, which includes the $525 establishment fee plus the first $125 annual fee. Then going forward, we charge $125 a year. Moreover, you've got a large range of investment options, right? It's the most that are allowed under the rules, as opposed to maybe a 401k plan where it's a very limited menu of investments, maybe with a high fee structure. So for example, a lot of our customers will have their accounts at a brokerage like Fidelity or Schwab, where Fidelity and Schwab don't charge anything to open up the account. There's no maintenance fee. They offer free online trading. So it's very competitive from a fee perspective. So therefore, the fees are very competitive and benefit the customer. Another myth is that you're better off with real estate or crypto. Again, those individuals, those commentators, a lot of times focusing on a full-time employer plan, which may have limited investment options. But with the solo 401k, if it's a truly self-directed solo 401k, the investments could include real estate, could include crypto, private equity, precious metals, more. So that gives us a chance to highlight the benefits of a solo 401k. So the top benefit would be, just in no particular order, some individuals are motivated by different things, but certainly one of the top benefits is the ability to maximize contributions. A solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. So for example, for 2025, the individual can contribute potentially up to $70,000 or even more if they're age 50 or older. With our plan, they can make those contributions as pre-tax contributions that will reduce the taxable income for the year for which the contribution is made, and or Roth or mega backdoor Roth contributions, which are made on an after-tax basis, but have that potential for tax-free growth. So that leads into the second top use case or benefit, which is the mega backdoor Roth. So with the mega backdoor Roth, individuals are going to be able to contribute up to $70,000 or even more if they're age 50 or older, where those funds end up in a Roth account. So mega backdoor Roth is more of the marketing or the industry term. Really what that entails is making what's called a voluntary after-tax contribution and then transferring those funds from the voluntary after-tax solo 401k account, either to a Roth solo 401k, so keeping them inside the plan, or transferring them out of the plan to a Roth IRA. So you have to have a plan like ours that allows for both the after-tax contributions and then the transfer to either a Roth solo 401k or a Roth IRA. It's not available for most workplace plans. So again, why someone might claim that a 401k is a scam, but that logic doesn't apply to a truly self-directed solo 401k like the one offered by my solo 401k Financial. Another top benefit is the ability to invest beyond Wall Street. So again, a lot of those commentators may be complaining that a 401k at a full-time employer plan has very limited investment options. Well, when you're self-employed and you don't have any full-time W-2 employees working for any business owned by you or a spouse, if any, you're eligible to set up a solo 401k, including a truly self-directed solo 401k like the one offered by my solo 401k Financial, where you can definitely invest beyond Wall Street. So you certainly can invest in typical brokerage type investments, whether it's stocks, bonds, mutual funds, but you can also invest in other alternative investments because our plan allows it, like real estate, private companies, crypto, tax credits. And these could be made either via a pre-tax account where it's tax deferred, or a Roth account where you have that potential for tax-free growth. Moreover, with our structure, the individuals have direct checkbook control. So that allows them to act quickly on investment opportunities. So that leads into the fourth benefit, which is that no custodian is required. So under the rules, the self-employed individual is eligible to be, and they really serve as the trustee of the plan. So that means that they can have direct checkbook access. So they can open up an account at a bank or a brokerage, and we're very hands-on in helping customers do that, where the self-employed individual, the solo 401k owner, is the trustee. So they have direct checkbook control over the money. So as opposed to, say, an IRA. So with a self-directed IRA, under the IRA rules, which are different, the IRA needs to be at a third-party custodian or trust company that offers that self-directed IRA. But that means that they're going to be charging fees, the trust or the custodian, also delays, right? Because you got to work with that third party to get access to your money. Whereas with a solo 401k and you got direct checkbook control, you can act quickly to take advantage of investment opportunities. Top benefit number 5 is control and speed. So because you have that direct checkbook control, you can, again, make investments quickly via that bank account or the brokerage account, not waiting for a custodian approval, giving you full control over your retirement funds. Some common questions would be, can I still use a solo 401k if I have a day job? The answer is yes, as long as you have that separate self-employment activity with no full-time, non-owner, non-spouse employees working for any business owned by you or a spouse, if any. What if my income is variable or I don't contribute every year? That's fine. There's no minimum contribution requirement. You can dial it up, dial it down. Now, if you later hire employees, it depends. If those individuals are just independent contractors, that's not going to prevent you from maintaining the solo 401k. But if those individuals are full-time W-2 employees who are not partners, right? They're not owners in the business and it's not a spouse, then that means the solo 401k would either need to be transitioned to a full-time employer plan that could accommodate those employees, but that means it'll be a much more vanilla plan, or the solo 401k plan would have to be shut down and the assets transferred out of the plan to an IRA. All right, so 401k isn't a scam, it's misunderstood. And we also need to make sure that we contrast a full-time employer plan with a truly self-directed solo 401k plan, like the one offered by my solo 401k Financial, that gives self-employed individuals unmatched flexibility. Ultimately, use it right. It's one of the most powerful wealth tools available. Wonderful. Thank you so much to give us a chance to go through those slides. Let's get back to the questions. Yes, we can pull up that link for the single member LLC. Give me 1 second. Let me grab that off of our website. All right, 1 second here. Here we go. Got a nice procedure page out there. Let me post that into the comments. Okay, next we want the procedure page for storage of crypto. Let me grab that page. And you can see some other good content on our website as well, including our forums, on our community, which is totally free to join. All are welcome. If you email us at business@mysolo401k.net, if you don't have access, we can get you access. There's over 30,000 members. We have forums. We have a library of videos and webinars. We've got the industry's first AI. It's a good way to find answers and resources quickly. So the LLC needs to be manager managed. So the member is the solo 401k, but the manager is going to be the solo 401k owner. These are great questions. Thanks for bringing them. Appreciate the engagement. So at the moment, Fidelity doesn't open up crypto accounts for a trust. They open up IRA accounts. So if a solo 401k owner is eligible to transfer money out of their solo 401k to an IRA, then they can make, say, a solo 401k contribution and then transfer it out of the solo 401k to an IRA at Fidelity to invest in crypto. We did a couple webinars about this recently. Let me paste over that link. So for example, after-tax funds, those can be transferred out of the plan to a Roth IRA at any time. Other types of funds in the solo 401k, you'd have to meet a triggering event. So for example, being age 59 and a half or older. A Rob's 401k, that's a plan that's used to fund a business. So in simple terms, the C corporation that's funded via the Rob's would typically either sell its assets, could be to another operator of the business, or if it's just liquidating. Once it's liquidated its assets, in either case, it would pay off creditors. So it could be employees, the bank, etc. Any money that's left over would flow to the owners, which is going to be the 401k as well as the other, like the owner of the 401k personally, would flow back to the owners in accordance with the ownership percentages. So in other words, the proceeds would flow back into the 401k account based on the ownership percentages. Then the 401k plan itself would need to be shut down. So the 401k assets would then need to be transferred over to an IRA. And then a final 5,500 could be filed to formally close out the plan. What's the main difference between the IRA, LLC, and the solo 401k? Ask because I have a solo 401k and a Roth IRA. So most folks who are eligible to set up a solo 401k are going to prefer it over a self-directed IRA. because it's cheaper, it's easier to have direct checkbook access. There are tax advantages, for example, in the context of investing in real estate with debt. But if you're not eligible to set up a solo 401k because maybe you're not self-employed, or maybe you are self-employed, but you have full-time W-2 employees, so therefore you're not eligible, or you have money in a Roth IRA, because Roth IRA funds cannot be transferred to any type of 401k, including a solo 401k. If you want to self-direct those Roth IRA funds, then some folks will do that via the IRA LLC, a Roth IRA LLC. So the purpose of the LLC is really, remember I said that the rules that apply to an IRA are different than the rules that apply to the solo 401k when it comes to the custodian. So with a solo 401k, the funds can be at a local bank or brokerage where the solo 401k owner has direct checkbook access, direct control. Whereas with an IRA, the IRA needs to be with a third-party financial institution like a bank or a trust company, specifically one that allows you to invest in alternative investments, right? So Fidelity, Vanguard, they don't offer self-directed IRAs just to retail customers. But there are specialty trust companies like Forge Trust that do. And then within the universe of specialty trust companies, some of them will allow the IRA account holders to invest in an LLC. So the IRA LLC structure would entail an LLC that's owned by the individual's IRA. So the member of the LLC is the IRA. The IRA account holder serves as the manager. So the funds flow out of the IRA to an LLC bank account, where that individual therefore has direct checkbook control over that LLC bank account. So the purpose is really to get the checkbook control over the Roth IRA funds, also to minimize the fees, because when you have the funds at a Roth IRA, third-party trust company or specialty provider, again, they charge transaction fees, investment fees. Whereas if all the transactions are handled at the LLC level, the trust company just sees an LLC and doesn't have a vantage point or a view into that LLC. So they're not charging transaction fees at the LLC level. Hopefully that makes sense. Appreciate the good chance to discuss these topics. Again, if you have questions or topics that you want to discuss, you can always come to our daily webinars. If you subscribe to our channels, whether on Instagram or LinkedIn or YouTube or X, you'll get notified of when we go live, and you can join and ask questions. Also, we'd really appreciate it if you subscribe. If you subscribe, that'll help us get the word out to other self-employed individuals like you. If you like the video as well, just like the video. That'll help us to get the word out. So we do appreciate the engagement. It's been a great session. Until next time. Oh, here we go. Well, you can email us at business@mysolo401k.net and describe your situation. You can book a call at mysolo401k.net/book. But yeah, if you can like this video, that'd be awesome. Help us get the word out to others just like you. There's a growing number of self-employed individuals, so they may find this information to be really helpful to help secure their retirement account. But again, they don't allow, based on the last time I checked, they don't allow opening up an account in the name of a trust to be able to invest in crypto. I highly doubt they're going to allow you to take the crypto. They might, but eventually. But the last time we checked, you had to hold the crypto on their platform. But yes, we welcome the day when Fidelity will open up accounts under the name of the solo 401k to invest in crypto. We definitely do. All right. Thank you so much for the great participation. Until next time, everyone, take care.